Prepare yourself for some profound insight into the realm of sustainable energy and investing as visionary investor and entrepreneur Chamath Palihapitiya explores the fascinating prospects brought about by climate change and the decarbonization of our energy sources, with a particular emphasis on Tesla. Chamath outlines why he has staked his money on this startup and why he thinks it has the ability to upend the power sector, for Thomas Tesla possesses all the necessary components to upend the stock market as it currently exists: strong financial performance, industry dominance, investor confidence, and limitless supplier shares. Jama believes that these elements taken together will result in an incredible price per share for Tesla that no other tech company in history will ever match. He also learns the 4 important factors that Chamath takes into account when assessing a company, ranging from product market fit to political ideas for advantages. Anyone interested in investing in Tesla or the future of energy should watch this video. Make sure you hit the like and subscribe buttons before we visit Chamath Palihapitiya to view the script. When asked where he was concentrating his attention at the moment in a recent interview, Chamath said, "If I'm being absolutely honest, I believe that climate change presents the greatest opportunity for economic growth of our generation." He also mentioned mitigating climate change by decarbonizing sustainable energy sources. One of the most fascinating things is that in situations where speakers and inverters are not necessary, having residential solar coupled with residential storage and software enables a person to very simply understand how much energy they have generated, the economic value of that energy, and how they have contributed back to the grid. Since it has the ability to upend utilities, and boys, I've held this belief for a while and have discussed it in public around Tesla. Right, Chamath? For several reasons, Tesla has the ability to upend the utility industry. Top energy storage, one of the biggest battery manufacturers in the world, Tesla has created a line of energy storage devices that enable utilities, corporations, and homes to store electricity produced from renewable sources. Utilities can lessen their dependency on conventional power plants and even out variations in the generation of renewable energy. Second place, electric cars. Leading electric vehicle manufacturer Tesla may cause a move away from gasoline-powered cars as the market for EVs expands, which would lower the demand for oil and, consequently, the demand for fossil fuel-based energy. Utilities would have to make investments in new infrastructure to accommodate EV charging 3 solar power sources in order to adjust to the change in demand. By encouraging the use of solar electricity, Tesla became one of the biggest residential solar installers in the US in 2016 after acquiring SolarCity. Tesla might benefit from lower utility demand for electricity, which would force utilities to adjust to a new market where consumers produce and use their own electricity instead of depending entirely on the grid. And for management of energy, Tesla is working on a virtual power plant that would combine energy storage devices to create a decentralized power grid. This could enable customers to sell their excess electricity back to utilities, opening up a new revenue stream for both businesses and homeowners. Tesla has also developed software that lets customers manage their energy usage and storage. All things considered, even though the change will be gradual, Tesla's products and services have the potential to upend the conventional utility model by encouraging renewable energy, lowering the demand for fossil fuels, and giving consumers access to a new revenue stream. The economic and infrastructure changes brought about by climate change present a once-in-a-lifetime opportunity, and Tesla is in the best position in the world to fully capitalize on it. Chamath then added, companies like that fascinate me, which is why I fell in love with Amazon so quickly after it launched, and why I sold all of my Facebook stock in 2014 when everyone thought I was a fool for arguing for Amazon's $3 trillion market cap in front of 5,000 people at the Lincoln Center for Irisome. Chamath went on to explain what he looks for when investing in a company, saying that the wait at any given time is crucial because a product could have a Zippo product market fit on day 2 or a great product market fit on day 200. The second component is the honesty and transparency of the management team. Once more, this is just the weight, and it can fluctuate and be high, low, or somewhere in the middle, but it exists regardless of how old the company is or how much money it makes. The third is what Chamath refers to as headwinds or tailwinds, which is whether the business is pursuing an initiative with higher prospects and that the past has not adequately explained. The headwinds are favorable for a number of reasons. The Tesla. The switch to electric vehicles is undoubtedly one of them. Numerous nations and areas like California and Europe have established goals to replace gasoline-powered automobiles with electric ones. The market for solar and energy storage products is expanding as a result of the global shift towards renewable energy, which is being fueled by worries about climate change and air pollution. This transition also plays to Tesla's strength as a top producer of EVs. Tesla is positioned to profit from this trend thanks to its acquisition of SolarCity and its creation of energy storage solutions. Due to its strong brand awareness and association with sustainability and innovation, Tesla is able to draw in investors and customers who are looking to invest in cutting-edge technology and environmentally conscious businesses. Another important factor is the development of battery technology. Rapid advancements in battery technology may make EVs more accessible and appealing to a larger spectrum of customers. Tesla is one of the leading companies in battery technology, which gives it an advantage over competitors. Of course, the government supports Tesla, and many governments around the world are offering incentives for the adoption of EVs and renewable energy, which could benefit Tesla, for example, the US. Federal government has proposed a plan to invest heavily in EV infrastructures and incentivize EV purchases. Overall, these headwinds are driving demand for Tesla's products and services in positioning the company for long-term growth, as Chamath has recognized time and again. So the fourth thing that Chamath looks for when investing in a company's political infanticide, which is how dysfunctional the company is. You can get that by checking out sites like Glassdoor and hearing the political correctness of the CEO on earnings calls, or in more candid situations if you're going to burn down now. $1 trillion worth of power infrastructure leading to countless utility bankruptcies. The industry stands to lose hundreds of billions of dollars in debt. As a result, this would have a profound impact on the economy, which would Chamath is investing heavily in companies that could have an impact on utility industries. If the bond price hits the conversion price, bondholders can use the conversion option to exchange their bonds for Tesla shares, potentially increasing their return if the stock price rises. Over the years, Tesla has issued multiple rounds of convertible bonds with different terms and interest rates. The most significant round, which Chamath is most likely referring to here, was in March 2021 when the company issued $1.5 billion in convertible senior notes that were due in 2025 with a conversion price of $1,371, pre-split shares, and an annual interest rate of 0.25. Convertible bonds can appeal to investors who want to reduce their downside risk but think that the price of the issuing company's stock will increase over time. However, as Chamath discovered painfully, the convertible bonds also have lower potential returns than investing directly in this stock. And he probably lost millions of dollars in the process. Going back to the interview, Chamath stated that, in other words, if you're going to invest in Elon Musk's companies, are you betting on the jockey in this case, or are you betting on the business model that he created for the company that we call Tesla? This is a great question because ultimately, when you're making significant methodical investments in technology companies, the first and foremost thing to consider is the company's business model. Let's take a quick recap. According to Chamath Polyhapedia, the biggest economic opportunity of this generation is climate change. He is fascinated by companies like Tesla that have the potential to upend utilities and is focused on the decarbonization of sustainable energy sources, particularly residential solar combined with storage and software. He evaluates a company's product based on 4 factors: market fit, management teams. Sincerity and openness hit a wins her political infanticide and tailwinds, but in the end, what matters is a man with a keen eye for business possibilities, a love for sustainable energy, and the ability to speak his mind. Given all the variables he has taken into account, such as product market fit, management transparency, headwinds and tailwinds, political infanticide, and others, it is understandable why he has his sights set on Tesla hitting $30,000 per share.